Hi everyone, good morning and welcome to today's morning report on Tuesday the 31st of March with me, Rich Perry, market analyst at Hantech Markets. The European trading session's got to a fairly mixed start, nothing too significant in terms of direction. I think the moreover we're looking out for this dollar strength that we've seen in the last few days that's started to drift back into the markets, and it certainly looks like it's just taking over once again. It's sort of now confirmed there was a bullish key one day reversal on the 26th of March on the dollar index, and it's now been confirmed by certainly a close of well above that bullish key one day reversal high, and it's continued today, and we're back above the 21-day moving average, and it looks pretty strong. It certainly looks as though, as we speak, that this dollar is regaining all the regaining all the momentum that it's seen, and certainly the moves that we've got on the dollar index against all these forex majors continues to break through key levels, and we're seeing the gold price, silver price falling away. Silver's my chart of the day today, and also we're seeing oil continuing to fall back as well. So pretty much anything that's dollar related is getting moved back towards the dollar today. In terms of what we're looking out for on the economic announcements today, we've got quite a raft of economic data actually today. We've started early on with the German unemployment, which has come out slightly better than expected. Actually, 14,000 is what the German jobs claimant fell by, and unemployment rate fell to 6.4%, so that was across the board better than expected. But we're now looking out for the inflation data for the Eurozone. We had the German inflation data yesterday that continued to improve on the German number, and the Eurozone data is expected to also improve. Now it's expected to improve to 0.1% negative, so still in deflation by 0.1%, but it is well up from the rates that we saw in the last couple of months. So it certainly seems to be beginning to show an improving trend on that Eurozone. I say deflation, so deflation is coming back towards inflation potentially in the coming months, but certainly improvement signs there. And then this afternoon we've got the US data that's coming out. We've got the Case-Shiller home prices index, which is expected to remain flat actually at 4.5% growth, so it's starting to stabilise again, certainly following on from a little bit, well, certainly a decline in the back end of Q4 of 2014. And then this afternoon, I think what's going to be the important one for the day, which is the consumer confidence. Now, this I think is an important number, because what you want to see is consumer confidence staying stable, because the inflation data has moved towards negative in the US, certainly on the headline anyway, and you don't want to see consumer confidence falling in that scenario. Now, we've got a slide last month back to 96.4, and this month is expected to slide again slightly more to 96, so not a huge difference. But I think anything demonstrably underneath that 96 would be considered to be rather negative figure for the dollar, and that would be suggesting that possibility that consumers are beginning to be affected by this drop in inflation. But certainly, I think at the moment if it came out at 96, that would be considered to be okay. You wouldn't want it to be falling back below 95, and maybe even towards these levels that we saw a few months ago. So you certainly wouldn't want to see that. But at the moment, we're still okay on consumer confidence, but you wouldn't want it to see it falling too much. So there is quite a lot going on today which can affect the dollar, and at the moment it remains very strong. And one of the charts, as I said, that we're seeing that on is my chart of the day, which is the silver price. Now, silver and gold both have been falling in the last few days, and certainly looks like silver is under pressure, because we've had this big jump in silver price since mid-March, and it seems to be retracing that move now. We've had this move to the downside in the last few days, and it certainly seems as though, looking at the daily momentum indicators, that the outlook is certainly beginning to deteriorate. You've had a sell signal crossover on the stochastics, which has now been confirmed, and also the RSI is falling away. So looking out on the intraday chart, if it actually works. No, it's not, which is annoying. Anyway, here we go. You've seen this break below 1640, which I will stick a horizontal line at, and that's 1660. You've seen a break below that support, which had been holding up, and that, I think, that old support could become new resistance. We've already had a sort of a slight mini attempt at it at 1657. It didn't quite get there, but it certainly looks as though it's falling away now. And look at the 21-hour moving average, which had been a pretty good basis of support on the way up, consistently using that as a basis as a gauge, and since rolling over it started to become the basis of resistance again. So interesting that that comes in around 1662, so just around that 1660 mark there is a basis of resistance. We're also seeing on the hourly chart, on the hourly momentum, the positive momentum, which had been consistently finding support above 40 throughout that period, is now below 40, now below 30, going towards below 30, and also it seems to be falling over again. So yesterday it fell over just around the mid-40s, so that would suggest that momentum is turning negative, certainly near term on the hourly chart, and also the MACD lines as well, back below neutral. So there's a general sense that this chart is now deteriorating. And I think that what we could see is a move back towards 1604, and the reason it is 1604 is that is an old pivot level. Had a bit of resistance there, bit of support, but more importantly gauged the key lows back from late February and early March. All these lows came in around 1604, so 1604 is obviously a key pivot level, and that is exactly where I think we could be coming back to on the silver chart. So in terms of what it would need to become positive again, I'd say it's probably anything around the 17 mark, although I think if you're going to get really sort of conservative in terms of turning positive again, I think above that reaction high at 17.19. But I think anything around the 17 figure mark, you'd probably say that was an old resistance, and that could well become again a new resistance again. So I think that could be an element there. But at the moment, I'm certainly not positive, certainly for the near term on this silver chart. It looks, as I said, on the daily as though we've certainly rolled over now, and there's a lot to suggest that we're sort of correcting back lower again. Anyway, I wish you good luck in your trading on silver today, and I will speak to you later. Thank you.